Hey everyone, welcome back to Mitchell Markets. Today we have an important update on Meta and my plans with Meta, known as Facebook. I just opened a large position on Meta at 615 share price, and I want to walk you through exactly why. This sell-off looks like an overreaction, and in my view, it's setting up one of the best risk-reward entries we've seen in a while. The big headline was that Meta's earnings per share dropped to $1.05, which freaked out a lot of investors. But that number is heavily distorted because it includes a $16 billion one-time tax charge, and if you remove that, this will be closer to $7.25 per share, which is completely in line with their long-term growth trend. So the fundamentals haven't broken down, market's just reacting to a non-recurring event. This entire pullback is emotional, not structural. Meta's revenue and user growth is still expanding year over year. Demand has stabilized, and engagement for its platforms like Instagram and WhatsApp maintain at all-time highs. The company is also deep in the AI build-out phase, investing a lot in the infrastructure and AI training, and that's weighing on margins right now. But those expenses are setting up the next multi-year cycle of growth. Wall Street tends to punish heavy investment phases until those investments start paying off, and then the narrative starts to flip. On the chart, Meta just retraced into my golden Fibonacci zone at the 618, a level that often marks strong institutional buying. Volume spiked exactly where buyers stepped in at previous corrections, which is suggesting now we're at an accumulation phase and not a panic phase. Between the 786 and the 0.5 Fibonacci levels, it is a strong buy zone. And when you have a setup like Meta and such a strong company, typically we're not going to see a retracement all the way down to the 786. We have to be really lucky to see something like that. But holding this very bullish candle at the 618 on the daily is a very good reversal sign. And then additionally, to jump on top of all of this, there was a swarm of short reports going against Meta and AI spending. Exactly when these earnings happen, that drastically flipped the script and is creating opportunity in the market. There is a lot of panic selling off, creating a gap between 679 and 740, and that is actually what is creating a lot of opportunity for us. And you typically see a sharp rebound once the selling pressure fades. So I was able to enter a large position size here around 615 as soon as I see it bouncing off my Fibonacci zone of the 618 and holding on the day, rather than chasing it later when it breaks back above the 638 to 675 levels. To me, this move down to the 615 isn't a sign of weakness, it's a chance to get exposure before the next phase unfolds. Meta is sitting on one of the most powerful ad ecosystems in the world. It's vertically integrating AI faster than any of its peers, and it's doing all that with one of the healthiest balance sheets in big tech. And the market was just focusing on short-term costs. But I'm positioning for a longer-term payoff where those costs start driving efficiency, engagement, and profit retention over the next few quarters. That's why I'm stepping in such a large position and not waiting for the headlines to turn bullish again. My target for this position is going to be to fill this gap. Hopefully we can close out around the 0.236 in the 721 to 740 range for this gap reversal. This is a swing position, and I'm going to be holding into 2026 and watching it closely. Hopefully this gave you some insight on predicting and watching the market instead of just paying attention to the headlines, the bad news, and other market drivers that is just noise. You have to take a look at the fundamentals, technical analysis, and really look deeper into the company and the value that it has. So I'll see you guys next on Mitchell Markets. We have a couple videos coming up, including one on Palantir. And if you have any questions or anything you specifically want to see, you can just drop it down below.